Let me introduce you our guest and award-winning tax specialist, Mitch Young, also known on his socials as Mr. Taxman.
I went from, getting this tiny firm in Elstree, national press, all these clients, and they had no choice within a year or so to make me a partner at the age of 27. Don't just sit and be a manager at a firm for ages. When there's opportunities and the right opportunities, you gotta go for it.
Mitch, not like many tax specialists I know, has built a good presence online where he shares a lot of free tax advice and important tax updates and changes.
HMRC have so much data on people, it's scary.
What's the highest unexpected tax bill you've dealt with?
I think we did 1 point. As a minimum, you need to understand how your income is taxed. I thought, well, if it all went completely wrong, I could walk into any other accounting firm in the country. Yeah. So I thought, this is going to be a great opportunity.
Mitch, pleasure to have you on, man. I've been wanting to do a tax episode for quite a while, and I'm obviously very familiar with your content across socials, which is really good to see because it's weird. Like you don't really see many people in tax or accountancy that are doing anything on socials. So almost probably the go-to for a lot of people, which is really cool. You give a lot of value online. But it's like your first podcast, I think, right?
Yeah, it is. I mean, I have been asked to do it. A lot of people have told me I should be doing it, but it's just timing. And obviously, when you reached out and given your content, what you're trying to do, I thought it'd be a cool thing to kick things off with.
Yeah. No, I appreciate coming on. Good to pin you down and get you here today. So I think tax is something we're talking about. Anyone really, I think, has got to know some level of tax. I think it's something a lot of people struggle with, especially people in my industry, in sports, whether that's football to boxers or anything. I think people really struggle with that. And even, to be fair, even a lot of guests that come on here, like business people that come on here when they first started as entrepreneurs, they normally made a mistake in tax and they normally do like a big tax bill. So it would be good to go through that today and get some, just get some basics really, so people can start thinking about it and maybe get the right advice. So, also, as well as being an accountant yourself, you're actually an entrepreneur as well. You started your own business, but it wasn't. You started, I'm guessing, like in just a usual job, right?
Yeah. Like I followed going back, I wanted to be a footballer like everyone. Right. Wasn't as good as you, but I thought I was. And studied history. Like most kids and go to uni, don't know what they're doing, or what they want to be. So I studied history just because it was 4 hours a week. I found it relatively easy and I could play football and do the usual bits. Mm-hmm. Then left uni and just fell into accountancy. My dad said, my mate is looking for a graduate. Do you want to do it? So I was like, all right. He wore me down. And then trained up, didn't really like accounting, found it a bit boring. And after a year and a half of training, I thought, is there an area that I actually enjoy and could specialize in? And it was tax, because I found like most people at the end of the day care about that bottom line, care about how much tax they have to pay and have to save. So I studied, qualified, and then just got a bit lucky and made a name for myself. I was tax manager of a small firm, and I said to them, this is at the age of 24, 25. And I said, what do I need to do to be a partner? And they said, well, why don't you go out and see if you can bring in some business? So at the time, there was literally like no one on social media in terms of professionals. Yeah. So I thought, right, how can I embrace that for like people my age and entrepreneurs and that wider community? Because I felt like the firm I was working with was called LJD Accountants. I was like, no one's going to care about LJD Accountants if I start doing social from them. So I thought I need to connect with people. And that's where I created the concept and the character of Mitch the Taxman. And
so you had that even while you was working with...
That's like 15 years old, right, or whatever it is. And at the time, it just went through the roof. I was having tie-ups with Martin Lewis. I was having journalists get in touch with me. I was, footballers get in touch with me. And I went from, getting this tiny firm in Elstree, national press, all these clients, and they had no choice within a year or so to make me a partner at the age of 27. which is quite rare in the industry
yeah,
to,
for sure.
to be at that level at a young age. So yeah, that's how I.
And that's it. Yeah, in a small amount of time, just a year from when you said, "How do I become a partner?" to that point, that was just within a year.
Yeah.
And I just you put that down to really just going out, being active on socials.
Yeah, but also not only that, it's a bit tongue in cheek. You know, I worked hard networking,
Yeah, cool.
building my LinkedIn presence. You know, building strategic partnerships with medium-sized mortgage firms. So I had a lot of referral networks and sources, and basically just trying to create a different vibe for your usual accountant and tax, and that resonated with, you know, a lot of people. And then I just got headhunted to larger organisations, and then what happened was my client, he was in the tech space, similar age. I was his tax advisor. He grew his business to 250 staff, fully exited, and I was advising him. And to cut a long story short, we obviously spent a lot of time together during that period. And he's like, "Look, Mitch, I know you want to disrupt the professional services space. Why don't we actually go into business together, split the equity 50-50, use my skill set in professional services, use his in actual business acumen and building businesses. What do you say?" So at the time I was 30, and without being too big-headed, I thought, well, if it all went completely wrong, I could walk into any other accounting firm in the country. Yeah. So I thought, you know, this is going to be a great opportunity. So I resigned from my partnership, nearly got divorced, and we set up my company, which is called the Fusion Consulting Group. You know, seven years ago.
Amazing. Oh, was you always, when you're talking about going through school and uni, was you always good at numbers?
No.
No, not at all.
No, I mean, I did. No, I mean,
all right. But you were struggling.
I was all right. I got a B in maths.
Okay, cool. All right, so not amazing.
Yeah. Well, I did.
Better than me, to be fair.
Yeah. No, I was in like the intermediate group, so you could only get a B. It was like, I can't remember what it was, but it was like you do like the stupid paper.
Yeah. I think
yeah, and then I did history, ethics, and politics as A levels. So I didn't actually do anything in maths.
Yeah.
And it, you know, and even tax, yes, it is. There's obviously numbers involved, but there's a lot of theory, there's a lot of research, there's application of law, and you know, interpreting that and explaining that. So, you know, that's what, you know. Yes, it is around numbers, but it's not like accounting or auditing where that is pure
numbers.
Yeah.
So what would you say when you started off really young? You obviously started off and become successful quite quick in terms of like impact.
Yeah.
What would you say your skill base was? What was you really good at?
I think it's people skills.
People skills.
You know, I just got a way with people that I can connect with people.
Yeah.
And I can, obviously find balance between, you know, helping people and selling and listening. And
that's come quite natural to you, or that something you was like actively trying to develop?
No, I mean, it's, you know, I always, you know, going out there at the age of, you know, 25 as a tax advisor trying to win clients, you could have people looking at you and be like, who's this young guy? You know, what the hell does he know? And yeah, that did happen in the sense that there are certain clients who want the grey hair, who want the KPMG, you know, but that younger audience, I was able to do well. But yeah, I joined a networking organisation called BNI, and that's basically a local organisation, you know, where it's got one of each profession there, and you meet up every week. But that also offered training, so that would have public speaking skills, that would have networking skills, and bits and pieces like that. So, you know, standing up and speaking and presenting, I had to obviously sharpen up. So I was developing skills along the way, but naturally speaking to someone and trying to help them. And that's what it's about. And that's what I like about tax. As we said, I don't like the numbers. I like helping people save tax, or I like helping people deal with HMRC. Yeah. And that's, hopefully that comes across, and that's, you know.
Yeah. I think as well, what you mentioned about, you know, being at that age, 25, for example, and, you know, your network and striking deals with some big names, big companies. I think I know what a lot of people struggle with as starting out is like having that imposter syndrome. you know, they're talking about things that they don't maybe fully know, or
Yeah.
talking to people that are way more experienced than them and maybe being worried about being found out. Did you have any of that at the time?
Not particularly, because, you know, obviously I was a qualified tax advisor and I'd had X amount of experience, and I specialized at the time and still do, on the private client side. So when people talk about tax, you know, tax is actually quite you know, a large area. There's so many different taxes, and you can specialize in a number of different taxes. So I specialize in private clients, but there's also corporate tax, there's indirect taxes such as VAT. So I was very aware and true to myself in what I could advise on, and yeah, I wouldn't try and go down the route I felt uncomfortable with. But also, you know, at the time I was part of a practice, so I was always able to bring in, whether it be an accountant or another tax advisor that specialised in certain areas. So it was never really, and I never really felt like that.
Yeah, starting off when you moved and went on to do your own thing, was you able to take many clients from previous?
Yeah,
to where
I
you
was very, very fortunate and thankful that my clients remained loyal to me over a couple of moves. So I actually went from that small firm where I made partner to another firm, and I spent two and a half years at that firm before I went to that final partnership. Right. So there was two moves essentially, and pretty much I maintained 95% of my client base from those two moves, because they understood the journey. They understood that, okay, he's moved from this position to a larger partnership position. And then I wrote to all the clients and spoke to all my clients and said, look, it's always been my dream to have my own business, and now I'm finally here. Appreciate all the support that you've given me.
That's a nice
and
touch,
it's been like a couple of moves. I'll take care of all the admin, but now I've got my own firm. Blah 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 blah, and you know that resonated well.
Yeah, and you didn't really have many reservations at that point. Like you mentioned, you could always, if it failed, you could always went back to any.
Yeah, I mean, obviously, it was my business partner is a machine. Like, I mean, you know, you've interviewed loads of entrepreneurs, but you know, he is like pure entrepreneur. Like, he knows like systems, processes, HR, seen there, been there, done it. So because I'm moderately well connected, I've had loads of opportunities over the years, and I've always thought in my mind that, you know, something's going to happen. Like, I'll know when the right time is for me to do something. And I knew with Adam that he is the perfect business partner for me and my skill set. And I didn't quite know where we'd end up, but I knew we were going to be successful. Yeah. So I wasn't scared or nervous. I was just full confidence.
Yeah, yeah. And at that point when you moved, did you class yourself as an expert? Were you an expert at the time of going off by yourself?
Yeah, look, expert's an interesting phrase, you know. I don't know if I mean I put on my socials that I'm an expert, you know, but because, you know, now we've got certain credentials. You know, I've got a Tolley's Taxation Award, which is like the Oscars in the tax world. You know, maybe I should have bought that one here. You put it there as a thing, or like a fake one that you put there. So and what I do day in, day out, you know, on property tax structuring, on advising, you know, I am.
I guess when I say expert, it's just that deep confidence that you have, where there's nothing really I can't solve or that I don't know.
Yes.
Was there that? Did you have that?
Yes.
Yeah.
Yes. That's how we feel. That's how I feel. But we're going on a journey. I know we're speaking about tax, and that's the main focus of today. But what we're doing with my company now, and I've seen this throughout accounting professions. Obviously, I've been a partner in 2 firms, and the feedback, and especially for the next gen entrepreneurs, we want to disrupt the market. So there's a common misconception about accountants that an individual or business owner thinks that their accountant should be doing everything. They should know about tax. They should know about law. They should know about their financial position, and they should give them all the advice. Whereas an accountant is an accountant, and he or she would do their best to put together a set of accounts and books and give them advice.
Yeah.
But what we're building is a 360 advisory, all within the one organization. So you've got your accountant, lawyer, tax advisor, and financial advisor acting around the table for an entrepreneur, private client, or business owner, all in-house.
Yeah.
And I'm a firm believer that is where professional services is heading, and that's what we've been building over the past 6 years.
Yeah. No, it is. Well, usually, you know, when you're like, when I deal with a tax firm and they're doing whatever, and I need a lawyer, I straight away ask the accountant. I'm like, I need a lawyer. Do you have one? And they go and outsource one.
Yeah.
So it kind of makes sense to have everything in your house, right?
Of course, because what happens in that scenario is your accountant, you know, knows you, your business, what's going on. You'll have a specific legal need. So then you'll go off and speak to the lawyer, and they do their work. They may or may not speak to the accountant, whilst at the same time you've got other things going on in terms of investments, and the communication and the effectiveness between everyone isn't there. What we're able to do is, on a fairly regular basis, be it weekly, daily for some clients, sit around the table, monitor the client's personal and professional life across everything, so it's all in sync. And that's really powerful. And especially for the next generation, I'm sure you've seen this, is that they're impatient. You know, people want things done efficiently, effectively, and fast. And if you're trying to pull in so many professional advisors from different firms around the country to try and
no, for sure. Have you got that up and running already?
Yeah. So when we set up Fusion, obviously we started on the tax side of things because, you know, that's where all my clients are. And we got all that set up, got the awards, and then we set the accounting firm up, got that all solid, got it staffed up, got it regulated. Then next, got the law firm, got that staffed, all set up. And last year we got FCA regulated and launched the final piece of the puzzle, which is the financial advisory firm. So that's all in-house, in my office, all staffed up, all regulated, all good to go.
Guys, let's speak jewelry for a minute. Meet Say It With Diamonds, an amazing jewelry company founded by a friend of mine, Charlotte, who you might have seen previously on this podcast. Say It With Diamonds have brilliant collections for everyone, male and female, and for any age. They launched a men's collection recently. They're also engagement ring specialists, and I can definitely vouch for them here, as they did make mine, which was amazing. Visit their website or go over to their Instagram page and have a look. Great quality and very affordable, but they also offer bespoke jewelry, as I mentioned, engagement rings and other diamond gifts. On their website, you'll see a member box that you can purchase for £20 for the year, which gives you 1 year's worth of free next day delivery and 10% off everything over £50. Even better, all the Money Game listeners can get a 15% off everything online using the code MONEY15, all in capitals. Don't play games with your jewelry, get it from somewhere trusted. When you do that, did you have that vision from the very get-go and you said, okay, we're going to build this first, then we're going to bring that in, then bring that in? Or did you just do it step by step? You're like, okay, we've conquered that now, what's next?
Yeah,
okay,
no. I mean, to be honest, I'd like to say it was well thought out like that, but it wasn't.
Everyone always says that when I ask that question.
No, it was like, right, look, we've set up this business. We need to focus on getting my clients in, getting the tax side flowing, getting that up and running, and then, we'll see where we get to, basically. Yeah.
Do you know when you go to like branch off and get something else, like another arm in your company, what are the main procedures to go and do to be able to do that? Is it like going and getting hiring someone to help you out to do that, hiring like a COO, or how does it look?
Yeah, so the structure, we've got sort of a group structure. So we've got all the individual businesses are in their own entity. And within that, we'd always hire a head of. So we've got someone who heads up the accounting practice division, someone who heads up the tax division, someone that heads up the financial. So first, we look for that pillar person, be it the accountant, the lawyer, the tax advisor, whoever it may be, and then we build a team underneath them. Yeah,
interesting. And then a guy like that, is that someone you employ, or do they get apply in the company, or
Yeah. So they get they are an employee, but they get profit share in their own line of business.
right?
And they get equity in that as well, in their
Just
own
in
line, in their
in
bit.
that specific
Yeah.
company.
So say like, I don't know, you're an accountant and I want you to head up Fusion Accountancy. You'll get a base salary and you'll get a profit share and equity in Fusion Accountancy. Yeah.
Yeah.
And all the companies are owned by our holdco. We give a percentage, a smaller percentage of the holdco as well, because our aim is to exit, grow the businesses to a nice size, and then exit one day.
Okay.
So that everyone can then benefit, from a capital sale.
Yeah, yeah. And is it person by person and deal by deal type thing, or is it every time you launch something new, it's usually the same kind of thing that everyone gets? When you talk about getting ahead.
Yeah. You've got to be consistent, but we're not gonna add on, too many new things. They're the 4 core services. For a business, we may, if there's an opportunity to add on like a recruitment firm or an FD firm or whatever it may be, but the core businesses, tax, accounting, legal, and financial are there. And now we're going to go on a buy and build strategy and buy accounting firms. And then what we have within the organization is client services division, so that our client services team can ensure that all those clients know about all our other areas of the business. And
And do you normally give that guy the guy that heads that company, do you give him profit share, just more of a motivator?
Yeah, but it's also, you want them to have leadership. You want them to be running that business like it's their business, and if they're successful and they're managing the business properly, then they should be rewarded in not only benefiting from a salary, but benefiting from a share of the profits, because it's their hard work on a day-to-day basis in running that division.
Yeah. Do you find it tough to find a guy like that?
Yeah. Recruitment's
Is that the hardest thing?
I mean, that's why I'm here in Manchester, to sniff out any good talent.
What would you look for? What would you look for in a person like that?
Well, I mean, it goes without saying, they need to be qualified. They need to have the necessary experience in dealing with the type of clients that we deal with, need to have experience in managing a team, being a motivator. They've got to have ambition and drive to grow a business, not just sit there wanting to do accounts as well. So it's tough. These people aren't readily available.
Yeah, because you'd think someone like that would kind of probably start their own business, right?
Yes, but most accountants and professionals, as you can stereotype, are risk adverse, and they wouldn't. There's a lack of good quality professionals in and around at the moment, so most of them will sit there, pick up nice salaries, stay with a firm for a number of years, maybe 5 to 10 years. And they don't, they're happy. They're happy.
So you usually try and go about that by maybe the headhunting for someone like that in another firm.
Yeah. Headhunting. I mean, we've got 6 recruiters on the go. We've got headhunters on the go. I'm on LinkedIn. It's always looking for. So anyone listening or watching, send me your CV. You never know. Yeah.
Do you know, just knowing about how much before you went off and done your own thing, so you know what you know about tax and accounting and everything like that. How much do you reckon that helped as an entrepreneur?
I'd say it helps, but for what I do for the business, which is marketing, sales, strategic development, commercial deals, recruitment, motivating staff, understanding the financials is understanding the financials. But I wouldn't say for what I do, understanding tax or accounts is what's fundamental, to be honest.
Yeah. What made you kind of start building that kind of brand on socials? Because like I said, do you even know any kind of other firms that do that?
No, I mean, look, there's no. I mean, it's a bit. I like the whole tongue in cheek, like take the mick out yourself type thing, type vibe, type. yeah, it just.
I think of two people,
Yeah.
you and one other person who does it online.
Yeah, there are more and more tax advisors or accountants coming out online. You know, I'm quite fortunate that I've built a bit of a presence over the few years.
Yeah.
And look, everyone's got their own style. If I resonate with X number of people, then someone else will resonate with someone else. You know, no one is going to probably, you know, come up with like a Mitch the Taxman cartoon and you know call it Kevin the Taxman or something, you know. But
Yeah.
So that's a bit niche. But no, it was great. You know, it was great because it was all organic, and you know, within my network and community first, that's where it sort of started, and I was making a big song and dance. But equally, you know, when I was trying things out, you know, I did get a bit of hate back, you know, saying like, oh, what are you doing? Like, why are you posting so much? You know, it's embarrassing and all this type of stuff. So you know, you got to build a thick skin on social.
Because did it ever make you want to come off?
No, I mean, maybe when I was a lot younger. Now I just smile and reply back and say, "No, thank you for your comment," or you know, do a smiley face or a crying face. You know,
I say that's always an indicator.
Like that.
Yeah, that's always an indicator that you're doing well. You're building a brand, isn't it? Like, you start getting the negative stuff. But is the socials quite? Would you say quite calculated, or literally you just get on, speak?
No, I mean, as you've probably seen, and I think one of the reasons why I do okay, or be like a marketing team would be saying, well, no, you'd be doing much better if you did it this way. But is that it is like raw. I literally like, right, who have I helped today? What's coming in the news today? I'll just be like, right, boom, post. You know.
No, it's good, man, because like, do you know when things change in tax? And I learned it's just from you pop up and you speak about all the changes that happen. So all the recent ones that I think you did, things that are changing in April. I was like, oh shit, that's good to know. So it's just like, it's very like convenient for people, isn't it?
That's it. You know, all I'm doing, you know, and it is calculated in a way, in like the strategy is, you know, help people, give them content, be real, and then they will come. Because they, you know, everyone I've got, at the moment I've got Calendly on my socials. So, you know, it's like ping, 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 ping. And it's, you know, when I speak to people, they're like, hi mate, you good? You get all this type of stuff. Cause they feel like they know me, you know. But that's also great because, you know, conversions are pretty high as well. In that regard.
But do you ever find yourself just like giving out advice a lot?
Yeah, look, when I was younger, you know, that does happen, and you're just like sitting there, and the client's asking more and asking more and asking more, and before you know it, you spent an hour, and they're like, "Oh, thank you very much," and then goodbye. Whereas now, you know, I'm pretty experienced. I've got a technique. I've got a routine. I say the same spiel at the beginning. Listen. Answer, remember, I'm like, right, next steps, I'll follow up with an email, send you a quote about how I can help. So my calls are about 15, 20 minutes max usually. And I'm aware of people who are just taking the piss, really. And I just, you know, so, you know.
And we're speaking a little bit off camera about different platforms. You saying like TikTok's been amazing for you.
Yeah, amazing.
Amazing. How long have you been on that for?
Probably about 6 to 9 months.
Nice.
And it's been the biggest growth platform that I've ever been on. You know, back in the day, I started on Twitter, Facebook, obviously LinkedIn. You know, you've got to be on LinkedIn, but Twitter and Facebook. Then I moved Instagram, and then with Clubhouse. Clubhouse supplemented my following really nicely during the lockdowns, and now TikTok. I've never seen anything like it. I'm getting you know, from sort of celebrities to high quality other professionals like lawyers to I got this client who's in his late 60s, owns hotels and a large portfolio in Nottingham, has 5 sons, never done any tax planning, and contacted me just because he saw me on TikTok.
It's crazy,
so the amount of people and the breadth of an age demographic and everything, it's amazing. But I have noticed the algorithm changing from when it was going like that to now. So you've always got to keep trying different things, and but
no, well, that's why I was surprised when you said that about some of the clients that you've got from TikTok. I'm like, are these guys really just sitting there scrolling on TikTok?
Yeah,
it's crazy.
Yeah, I mean, you don't know how it gets to them. I mean, maybe some of them they're checking their kid's phone. And well, I don't know. It's getting to them. It's getting to them.
Yeah.
And it's great. And now people are, more and more people I speak to, the hashtag learn on TikTok, the short, snappy videos. The concerning, well, not concerning, but the slight issue for me, and you've probably seen this, doing your own research and chatting to people over the years, is that, it's all very well to put in a video, but can you trust them? What's their background? Just because they're talking about tax, just because they're talking about money. Like, I've seen so many people giving money advice because, they're just giving money advice because they think they're just using their experience, but might not be qualified to do so. So there is a bit where, people might actually take an advice off of a TikTok clip or a social clip, and it might be bad for them, which is,
Oh, you mean sure just hearing something on TikTok and then actively... Yeah,
just because someone has X number of followers, just because someone says that they're, a money expert or a property expert, it's loads of people and that you've seen, like, everywhere. I'm a property expert. I've done this. I've renovated this. I've taken out loans here, done this, done that. So I'm not sure what anyone could do about it, but it's just a thing. As well,
have you had any other business ventures outside of this whole Fusion?
No.
Anything else?
No.
So you've been quite focused on...
Yeah, because, I mean, Fusion is essentially 6 or 7 different companies that we're trying to run under one. It's not just like one thing. So, no, I mean, I've got big plans.
But nothing outside that kind of, finance?
No, I mean, obviously I've got investments and things like that. But I'm waiting. So when we sell the business, then I can, do more passion type business and things that I want to do.
Like what? Which can you do?
Well, I want to do something. I want to definitely do something for charity, like some charitable foundation. And then I want to do something involving either coaching or teaching, kids, be it football or whatever it may be. Nice. Education through sport.
Okay.
I think it's really powerful, that I don't have a plan for it, but I think if you get people in the right environment, so they're playing sports, and then you can educate them whilst they're there in an environment about, maybe it other people's religion, or whatever it may be, then, that's what I'm trying to sort of formulate as well. And then I want to have a bar and restaurant, all the cool stuff.
Yeah.
That doesn't make money, but it's just, cool to say you've done it.
Well, that's interesting. That's why I asked, because a few people that have been on here, when they were like kind of driving their business, got distracted. They would do the bar thing while they're doing their business, and they end up paying for it, and then getting back to be like, no, that's a distraction. I really need to focus on this. So you've obviously done the right way around. You're putting everything into this, and only when you exit and you kind of have the ability to do that. But there's been so many people that always like warn me about that, just like getting distracted from different ventures while you're growing your your main business.
I mean, to be honest, I don't have any time to get distracted. Like I'm still delivering. We've got teams, but I'm still very hands-on on the delivery side of things, albeit the tax advice. And I've got a family and commitments and everything else. So it's like I don't have the time to get distracted. We're very laser focused on what we're doing. I've got 3 boys.
Oh, 3 boys. Jeez. So, you got no time.
Yeah, and a dog. So it's
that's tough. I got 2. 3 is a jump from 2 to 3 tough? I think 1 to 2 is very tough, I found.
Yeah, I try and I just live in this hazy days, in terms of like not remembering what life was like. Look, obviously 1 to 2 is the biggest jump. To 3, you sort of are prepared. I think
Yeah.
with 3, it's just about the logistical side of things, and now he's a bit older and everything else. Once when the baby's there, 0 to sort of 2 or 3, all the families involved, all your other siblings, are helping. But it's when they get a bit older, where logistics and everything else, and the transactions between one another. I got 3 boys, all boys, all football, all fighting, all winding each other up. My wife, she's it's no, it's all fun. You've got to appreciate it.
Yeah. Would throughout when you kind of growing the business, has your missus just been at home looking after the boys, or she works.
Yeah, she works. Yeah, she's marketing. She works part time. Obviously, she was working full time, but then when we had the kids, she works part time for doing marketing for a charity. She loves it.
I really hope you're enjoying the show. I would just like to ask for 1 minute of your time to tell you about my sponsor whose support makes the show possible, CPC Finance. CPC Finance is a finance broker that specializes in sourcing and packaging a wide range of property funding. You name it, from buy-to-lets to commercial properties, auction investments, property developments. They are everything you'd want as a finance broker working for you on your property deal. They're extremely experienced. They know their market extremely well, which means they can move quickly. They're on the ball. They've been in the game for 30 years, which has enabled them to, 1, build very strong relationships with a variety of lenders, which as an investor is super important, especially when things don't go to plan. Deals in certain situations aren't straightforward, which is often the case. They are bespoke specialists. And 2, they have a brilliant understanding of all types of property investing. They know the strategies, they understand deal structures. There isn't anything these guys haven't seen, they're seasoned pros. So if you're someone looking for property finance of any kind, go to cpcfinance.co.uk, and on the homepage you can schedule in a call at whatever time or day suits.
Have you found that tough? Just just obviously having the kids there while driving the business, being so busy. How you kind of deal with the personal stuff while driving the business as well?
Yeah, it's tough. I mean, I've always ensured that I make time for the kids. So I get home, when I'm not in London or doing stuff, I get home at 5, help bath time. I'm there, make them breakfast, get them up in the morning. Take my son Wednesdays to his football training. Manage my other son's football thing. So I think I'm as balanced as I possibly can be.
Yeah. And you talk about this if you want, but you mentioned the divorce as well when you're growing your business. You nearly divorced.
No, that was tongue in cheek.
Oh, was it?
Yeah.
Oh, right.
Yeah.
Oh, that's really serious.
No.
Cool.
No, I mean, obviously, my wife was, she was nervous.
You saying tongue in cheek because you was working a lot?
Huh?
Do you mean
no?
because
Because essentially, you go if you put yourself in your partner's position when you're, your wife. When you're a partner in an accounting firm, you're right at the pinnacle of your career, and you're rewarded accordingly.
Right.
Fixed salary, nice bonus, blah blah blah. And we moved house, whatever. So it's right. Giving up all of that to start up your own business. She was a bit nervous about it. So we had conversations, and obviously it was nowhere.
Yeah, you said it with a straight face. I
know. I got a bit of a poker face. You'll get to know that about trying to read me. Yeah, but it's. So
how did you deal with that? Did
we had a conversation, and I said look, I've got to where I've got to in my career. You have to trust me. And I wouldn't be. It's a calculated risk, and she's always supported me and been by my side. So
did you have the 3 kids at that point as well?
No, we had definitely had 1. I think we had 2.
Yeah.
The second was young.
Yeah. I like those stories, man. Little risk takings. I think that's that's a big reason for the podcast as well. Most people we've had on have had that transition, had that period where they've kind of taken that leap. I think, especially me, I have a lot of friends that are kind of sitting on that fence where they know they want to do more, they know they want to do something for themselves, but they kind of just can't make that.
Yeah,
the further they go, then they end up getting kids, and it's bigger risk, and then they get 2 kids, it's even bigger risk. Do you know what I mean? So it's good to hear
and taking the calculated risk, and hopefully there's people who are listening or watching this who are accountants and are tax advisors, and I have spoken at like in the institute's events to like recently qualified, to say that, you know, don't look back in your life and have regrets. You know, don't just sit and be a manager at a firm for ages. When there's opportunities and the right opportunities, you know, you gotta go for it.
Yeah, 100%. So yeah, let's go into like tax a little bit and to get and talk about that. The first thing I want to ask: why do you think tax is so foreign for a lot of people?
Yeah, I just think that they hear the word and they just glaze over, and it's just you know, a word that's been associated, and they don't understand what tax is. And there's so many different taxes: income tax, VAT, inheritance tax. You know,
they complicate it on purpose, right? Sure.
Yeah, but also like the education system as well. So if you go back to, you know, why would someone know about tax? Like who tells you about tax? Because I didn't learn it at school. So and you probably didn't learn it at school.
Definitely not.
And our kids are probably not learning it at school. So you sort of have to learn on the spot, and depending what you're doing or where your career is going, or if you're just, you know, a typical person in the UK who's picking up a salary or self-employed, just trying to make money to live and feed their family and everything else, you know, and then like tax, yeah, well, yeah, I know I have to sort of pay tax, but like,
yeah,
I don't know the rules, and why should they? And this is one of the things with HMRC is that in the UK, HMRC operates self-assessment in terms of tax and tax returns. They expect the individual to keep up to date with the tax rules and self-assess, which is, you know, in a way unfair. But I think it comes back to the root of education.
Yeah, I always think that because, you know, they expect like a lot to be this done on time, to do this perfectly. Yeah. But like, and if anything ever happened, I couldn't just be like, oh, I didn't know.
That's the thing.
You just lose, don't you?
Yeah. And the worst thing is that even HMRC have this concept about a reasonable excuse. In terms of if you get a penalty for late filing or any type of penalty, if you've got a reasonable excuse, then you can appeal the penalty and they wipe it out. You would assume that if you've paid, you know, your hard-earned money to be like, right, look, I don't know about tax. I'm going to pay someone, an accountant or a tax advisor, to do it for me, right? Even if the accountant, you know, there's a penalty or whatever else, you know, HMRC won't accept a reasonable excuse that you've hired an accountant or a tax advisor.
Yeah, so if they fail to do it, it'll still come back to you.
Yeah, as an individual. So, and this is why, you know, I try and put out stuff so that people won't get hit by a penalty. All there is, as you know, every government change, every budget, an update.
Yeah.
And especially if there's major government changes, like if Labour come in, which, you know, is obviously looking likely at the next election. But if they do come in, you know, essentially you rip up the tax rule book and here's a whole another tax rule book. So,
yeah,
you know, it is, I do feel for people because it is a minefield. Yeah. And for us as well, you know, we got to consistently keep on our toes.
How'd you do that? Where do you find out any rules on that?
Yeah, so we have, as professionals, you have what's called CPD that you have to do. So you actually have to do structured training throughout the year. So I do quarterly tax update courses, you know, 3 hours at the institute by, you know, tax lecturers who go through law changes, case law, all this type of stuff. I do, the Institute puts on topical monthly things. So there might be one which I'm really interested in. So it might be about crypto tax or updates on that. Or it might be like the latest law, case law on property tax. So I do probably about one webinar a month. And then on top of that, as I'm sure you know, I do my own webinars. So that may be on a topical subject, which obviously I have to research and do. And then over and above that, I'm delivering tax advice every day. So we've got things like tools like Tolly's LexisNexis. That's basically a library, online library of all the tax legislation, all the books that we can tap into and research at any point.
Yeah, geez, that sounds like a lot. Would you ever like for me, obviously it's probably different, but for me now when I'm like trying to figure out a new tax rule or something that I didn't know before, I just like, my brain just gets frazzled. So when you go and learn new stuff, can you pick it up quite quickly now? Obviously, because you've done tax for your life. Or is there still times where you're like, geez, this is like hard to understand?
No, majority of the time it's fine. There are complex areas of tax in terms of niche areas that, you know, to follow the process of how you get to the calculation is you know, you've got to do it a few times. But no, most things I can understand and interpret. And that's the thing about tax. What I was going to say is that you have the legislation, but of course there's scenarios in life which aren't black and white. So then what you do, so as a professional, then what you need to do is you need to look at recent case law and then see what the common themes are in those cases, and then using that and the legislation, apply it to the client's circumstance.
Got you. What? So you agree, like tax should be taught in school, right?
Yeah, completely.
And then what do you think the minimum? It's probably hard to measure, but like the minimum amount someone should know about tax at least to just be competent and, you know, not get in trouble.
Yeah, I mean it's hard to say, but I think as a minimum you need to understand how your income is taxed and the different sources of how you earn and your responsibilities across that.
Yeah.
And then, you know, whether you're an employee, talking about a P11D, talking about what, you know, how that's taxed, you know, obviously PAYE, most people can understand, but then talking about your tax code, the makeup of the PAYE, which a majority of people, you know, don't understand. And then if you're self-employed, you know, a lot of people are self-employed or want to be self-employed, understanding about, you know, the responsibilities and how that's taxed. So, you know, the core areas of how you earn and how you're taxed, I think as a minimum would be a starting point.
Yeah. And what would you say the most like common mistakes are about tax that people make about tax that you see?
Yeah, again, we're sort of generalizing, but if we're talking about, you know, income tax for argument's sake, so, you know, if we're talking about landlords, so landlords where they might be renting out property, but they may have made a loss in a year, or their profits were within their personal allowance. You know, they think they don't have to do a tax return in that year. And, you know, that creates historic issues and that creates penalties. And we're seeing that a lot more. In terms of employees, if you earn above £100,000, you need to submit a tax return. So a lot of people don't realise that. Even if you are an PAYE, you still need to submit a tax return at the moment. One of the biggest ones is around child benefit. So
I heard you speaking about this.
So if you or your partner, earns £50,000 or more, and you're in receipt of child benefit
together.
No.
Or separately?
Individual. So if you or your partner earn individually 50,000.
So she could not earn anything, I can earn 50.
Yeah. Cool. Then if you're in receipt of child benefit, you need to submit a tax return.
Right.
And what they're trying to do is that saying, right, you earn this amount, you need to pay the child benefit back in terms of tax. And so yeah, I mean, if you're a normal person, I mean, how you're not going to know that.
Yeah.
And now
they're hit with that tax bill.
Well, yeah, but not only the tax bill, penalties. So you get 1,200 quid for, you know, failure to submit for a year. If there is tax, you're going to get interest. You're going to get potential penalties on it. Yeah, it is harsh.
Shit. And as well, you said anyone makes over 100 as a PAYE has got a file tax return.
Yeah.
Not under 100k.
No.
I actually didn't know that. I thought everyone did.
No. No, I mean, if you're just normal PAYE, like, I don't know, like 35k, 40k, 50k, you know, you don't need to submit a tax return.
Okay, cool. Yeah. And then, so we mentioned as well that you work with quite a lot, or you did work with a lot of athletes. Was there any common themes there in terms of how they acted, what they knew about tax? And
Right, it's a real mix of people and their experience to tax and business. I think some of the common themes that I noticed and where they had got into trouble was because I acted for a lot of guys who were towards the end of their career, and some of them had historic tax bills and issues with HMRC because what had happened, they usually would have one bigger move, And what happens in that situation is that the club would pay the agent fee.
Mm-hmm.
And what happens in that scenario is that there's a P11D type issue that goes on because the club is paying on behalf, a benefit essentially on behalf of the player. And that moved them into a different tax bracket and created an additional underpayment of tax. And because the players didn't realize what was going on, or how that's taxed or whatever, they just
also got
it.
to pay tax on that beneficiary of
on that benefit. Yeah. So, and it created this, big mess. I dealt with 3 players in a similar type of scenario throughout their career on that specific thing.
Yeah. But you know what's crazy as well? None of them know. Well, I don't think there's maybe a few, but majority of them don't even know that they can claim expenses back.
Yeah.
On top of that, to take off their tax bill.
Yeah. And I think this is really important.
We would buy recovery machines worth like $2,000. You'd buy any training equipment, boots, like thousands of pounds.
Yeah.
They just leave on the table because they just don't know to claim it back.
Yeah, and I think it's really, that's why I've loved working with the the players outside the Prem, because obviously there's a stigma around football and footballers, but they're the ones that you can help in terms of you can make a difference to them. A few £1,000 claiming stuff back, that's going to help them. Whereas what I found in as you go up the leagues, and you tend not to deal with the player. Everything tends to go through the agent.
Yeah.
And I was dealing with a couple of England players. Well, I actually wasn't dealing with a couple of England players at the time. This was about 6-7 years ago.
Okay, cool.
And it was like, right, Mitch, need you to do this was the agent. I was like, need you to do a tax return. And I was like, okay, great. When can I sit down with the player, discuss? He was like, no, you do the tax return. I'll sit down with his mum, go through the tax return with his mum. Any queries, I'll come back to you.
Yeah, that's common. I think that's a problem. I think that's a problem as well.
Well, you're going to go through the tax return. What's that? Anyway. So I prefer dealing with people. So that's why. Anyway.
Yeah. No, I think just as athletes, we're too content with just passing over everything to other people.
It's a trust thing, isn't it?
No, it's lazy as well. It's a bit lazy because I just want to. I just want to do nothing but play football. I don't want to learn anything else. I don't want to do anything else. Anything that's outside of that, or that's a bit hard, I just want to pass it on to somebody else. When, no disrespect to agents, but a lot of agents aren't that clued up in terms of tax, investments. They just aren't. So then, do you know what I mean? Later down the line, when the things find out things have gone a little bit wrong, or this isn't as good as an investment as what I thought it was, or the tax wasn't done properly, it wasn't explained to me properly, then you can't really, I guess, blame the agent because you just neglected it yourself.
Yeah.
And that's what I figured out. I heard someone said this on Instagram the other day. It was really clever. It's like a businessman needs to train like an athlete, and an athlete needs to train like a businessman.
Yeah.
Because every businessman, if we knew, why is it every time I speak to like an accountant, they always say HMRC hate footballers.
Well, I mean, I
think that they would love footballers because we leave so much money on the table.
Yeah, I mean, look, they're just an easy target. They're just easy targets. They're high net worth individuals, whom they may see might have investments or assets and might not have been advised. They've got certain structures. They're just an easy target for HMRC. So at the higher end, but now, HMRC have so much data on people, it's scary.
Really?
They invested £4 million 3 years ago on a new central CRM, and basically what it does, it's with the API, it connects with like land registry, it connects with people's banks, it connects with a few other sort of sources, like 9 or 10 different sources, feeding them information. And then what happens when there's any like anomaly on your account? So let's say, on your tax return, and then on land registry, there's a property that you own, but it hasn't appeared on your tax return. Then like an automated, what's called nudge letter will be sent to you. And it's a standard letter, but I'd be like, dear Mr. Stewart, can you confirm you own this property? And it lists the property. And then that's where they start opening up investigations. It'll be like, how come I was on your tax return? Blah 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 blah. Yeah, it's getting proper Big Brother style. So the key thing is, of course, and this is what I always start with as a fundamental, is that you need to ensure that you're doing the right things and you're complying. Because and also they've changed the penalty regimes. It's really high. So you just got to be compliant.
Yeah. They must have millions of people that work for them. I've never met anyone that works for HMRC.
Yeah.
They must be
they're spies. They're spies.
I mean,
these guys, look at them.
Maka works for HMRC.
No, but what were we saying? I can't remember what's going on.
Well, just that whole system that they've got is actually a bit crazy. That's scary.
Yeah. So you said there's loads of people that work for them. So basically, during the pandemic, they sort of laid off quite a lot of people as well. And what was happening during those couple of years is that they couldn't deal with all the information, and they couldn't deal with certain types of investigations. So actually, a lot of people who are under investigations, either their investigations actually got closed off during that time.
Right.
So it was an interesting time to deal with HMRC during the pandemic. Now, gearing up, we're seeing a lot more activity, we're seeing response times get much better. We're seeing letters, more and more regularly now. So they are coming out the other end of it. Yeah,
interesting. One thing I also wanted to bring up that I think a lot of people there's things that people should know about when it comes to inheritance tax. I remember I had a convo with someone once, and some of the things I was telling me, I was like, oh, that's crazy. I didn't know that. Just in terms of what happens to your wealth if you pass, and the amount of tax your family will get taxed if maybe you're not married or something like that. Is there anything that pops to mind, springs to mind, the basics that maybe someone should know about inheritance tax?
Yeah, look, inheritance tax, if your estate or the beneficiaries have to pay it, it's a horrible tax because, it's 40% of the sort of estate over and above a certain amount that, goes to HMRC. That could go to
kicking the family while they're down.
Yeah, it could go to the beneficiary. But, and I did a video on this the other day, is that people do have their allowance, which is called like the nil rate band. So essentially, your estate can be worth X before there's any inheritance tax. So for instance, the basic scenario is if you've got, a
like 325 or something.
Yeah, 325 per person. But then what happens if you're married and you die, then your wife will get that 325. So it goes into a total estate of 650.
Meaning if she passes, you mean?
No, if you die.
Yeah. So let's say my estate is worth $1 million.
Yeah. So and that you've got a main property within that.
Yeah.
So that essentially, if you're married and your wife's died and you then inherit her nil rate band and then you die, then you would have £1 million tax-free allowance on death. So your kids wouldn't have to pay inheritance tax because you've got that 650, and then you've got what's called the additional nil rate band, right, which essentially tops that up to £1 million. So this is why some people think that, oh my god, it's going to be 40% on everything, but it's not. There is this nil rate band available, and it's only for estates which are above $1 million total estate, less debt as well. So again, with inheritance tax, you're allowed to deduct loans and outstanding debt against the market value of your estate, and whatever that net position is, that is what you're going to be subject to inheritance tax.
Yeah, Fraz, I'm going to have to watch this podcast back a few times to fully take on. But is there anything else that stands out?
Well, of course, you've got things like, gifting. So the idea is that when you die, you want to have as much out of your ownership as possible. So, you've got gifting. The issue with gifting, particularly if it's an asset like property, is that there's always capital gains tax or stamp duty to consider if you're gifting it anyone that's not your spouse. What people can consider...
Even for your kids?
Yeah.
It's crazy. Yeah.
What people can consider is what's called gift out of income. So let's say you've got, I don't know, some investment account that's giving you, I don't know, 10K a year.
Yeah.
But you've got other things and you don't actually need that 10K. What you can do is that you can gift that 10K to your children, and that will sit outside inheritance tax. You don't have to wait 7 years for the gift or anything. It's called gift out of income.
What are you putting it into? That 10K?
No, I'm just saying if it's like an investment account, or even if it's rental income that you don't need, if you gift that rental income to your children, so it falls outside your estate, that 10K. Because if you've got 10K sort of sitting there, it's going to be subject.
Yeah, I mean, like, how's that structured? How do you mean gifting it to them?
I don't know, bank account, ISA.
Oh, right, okay, cool.
You know,
and you just leave it in there, keep putting it in there, and then if the time comes where I pass, then that income that's sat there that I've been paying into isn't taxed.
Yes.
Got you. And they just get access to it straight away.
Yeah.
Okay, cool. I guess this is like, there's a lot of things like this that a lot of wealthy people do, right, to try and avoid it once to get into a certain point.
Yeah, I mean, you know, like obviously some of the type of planning that we do, one, it always involves a trust. You always should consider trust as part of your arsenal if you've got a family, because, you know, not only for tax purposes, a trust is the only way legally that you can protect the bloodline of your assets. So once something goes into a trust, you know, if your kids get divorced or anything like that and bankruptcy, it's protected and ring fenced within the trust. When it's in the trust, it also sits outside the estate from inheritance tax purpose. The one thing with a trust is that everyone has to be comfortable with the fact that it's out of their ownership. They can't benefit from the income or anything. It's in the trust. So trusts always form part of the arsenal. We're doing a lot around what's called family investment companies for, you know, certain types of clients where they have business interests, certain types of wealth or whatever. And that is where, you know, you set up sort of like a family company, and there's different classes of shares from the parents as directors to the children. They have growth shares. They don't have rights to dividends or anything like that. There's use of loans, and you can invest via the top company into other companies. And the main idea from a estate planning point of view is that you're growing all your wealth and investment in that structure. The kids on day one will own 48% or whatever it is of that. All that future growth, because they already own it, is outside the estate.
Do you know? Yeah. So do you know it's crazy? There's like, from what people know about tax, or the little people know about tax, there's such a bigger and more creative side to it, isn't there?
Yeah.
There's way more to it than
because as I'm like trying to explain is that, you know, take property for example. You know, you got to look short, medium, long term, income, capital, stamp, corporate, inheritance tax, and, you know, most clients that I deal with, you know, they then have, you know, other businesses and other ideas, and there may be, you know, a lot of people are thinking about offshore or leaving the UK or whatever. So, you know, it's a whole like putting together. I call it a master plan for the clients.
Yeah.
I call the first phase of work is foundation layer, which is essentially looking at all the different options and then the interaction between all the taxes, and then we give that to you and be like, yeah, I like this, don't like that, and then you build up to the master plan. And that's what I like doing, you know, that type of advisory.
Would you say is that more for the wealthy? A lot more wealthy?
Yeah. I mean, everyone's got
you get the more money you got, the more creative you can be, right?
Yeah, but also the more exposure you have to tax. So, you know, there's more to consider.
Yeah, true. Do you how creative? Well, with you, for example, do you think the dynamics between a client and an accountant or a tax specialist or whatever, do you feel like because they're quite reserved usually, and they're quite conservative in terms of getting you in trouble, or whatever. Do you feel like the client is supposed to try and be more creative, and then it's guys on your side that are trying to like let him know when he's gone too far? Or do you feel like you guys are more the creative ones?
Yeah, I mean, I think the industry's changed a lot. You know, people don't want to be too aggressive, and you can't be too aggressive anymore in terms of, you know, like tax avoidance. So, you know, we are as proactive as we can be, as advisors. I sort of call it proactive conservatism. We interpret the legislation and we give you every single opportunity and scenario to help you save tax.
Yeah, but it's not always black and white, is it? So there might be one firm who's like, no, you can't do that. That's a bit too far. You probably get in trouble. But then there's another firm that'd be like, yeah, you could probably do that.
Yeah, but I think that comes with experience. Like, I get this a lot. Yeah. Particularly around properties and incorporating properties. And if you haven't done that work or researched or understand it, then you're going to be more risk averse on that side. Yeah. Whereas because I advise on it day in, day out, I'm able to give the client the confidence. And so I think that comes down to experience. A lot of the accountants who aren't necessarily tax specialists will shy away from writing tax advice.
Yeah, because I think did that also come down to maybe the ability to defend someone if HMRC does feel like it goes too far? Or do you think once you get to that point,
yeah, I mean, we're governed by our professional code of conduct and ethics. So if there was an issue where an advisor thought that the client was doing something wrong, then we'd have to disengage, and there's other things to consider, like anti-money laundering responsibilities and things like that. So, yeah. Well,
in terms of when I think about tax and about how much you get taxed, and I think even with like footballers, I just think that there is room to it's all obviously legal, not illegal or anything like that, but a chance to be more creative and things that does fall under things that you can claim back that probably people don't claim back. But then I've had sometimes a little bit of mixed reviews and difference in opinions from different firms, where one's cool that, yeah, that's cool, that wouldn't be a problem. There's one like, no, HMRC won't accept that. So it's hard to know, okay, is this one right or is this one right?
Yeah. I mean, obviously you're not going to know that. You're going to have to go on, who you feel you can trust, but also you got to look at worst case scenarios as well. Most firms will have what's called professional indemnity insurance. So basically that means that, if I tell you to do something and it ends up you losing money, then you can claim on my professional indemnity insurance that be like, look, Mitch just told me to do this. It's absolutely wrong. It's cost me $100,000 plus fines, so 150K. You need to pay that to me, type thing. So most firms will have that.
Yeah. Do a lot of your clients get audited quite often?
Not really. I haven't seen
it. Is that rare?
It's rarer.
Yeah. Cool. No, I want to finish off with a quick fire round.
Okay.
See if we can get some little snapshots, little TikTok advice type style. So, advice for new entrepreneurs starting a business. Could be tax or it could be just in general.
Yeah, tax-wise, I'd consider getting registered with HMRC for SEIS and EIS. So if you get that early on, get that advance assured, so that if you are going to raise money early on, then you've got good tax incentives for investors to invest in.
Yeah, nice. Tax tip for property investors.
Yeah. Loads. I'd say the basic one, it'd be if you own the property in your own name, you're paying a lot of tax. Consider a deed of trust whereby you can give some of the monies to your wife or spouse, civil partner, whoever it may be, to take advantage of their tax bracket, because tax law differs from actual law, i.e. tax always follows who is the actual beneficial owner. So you can be the legal owner, but then you can use your wife or spouse as the beneficial owner for tax purposes.
Nice. Tax tip for athletes.
Yeah, I think as you said, I'd be if you are spending anything for the purpose of your trade, and then you need to keep receipts of all of that and put a claim to HMRC. You can go back 4 years. So if you are spending things like equipment, supplements, if you're having to travel to stadiums or wherever, collate that all together, do an overpayment, a repayment claim to HMRC going back 4 years.
Yeah. Well, I actually want to talk about it a little bit because it's a bit annoying because I feel like a lot of the times HMRC don't see certain things as important for being a footballer or becoming a better athlete. Like, for example, what things would you say are out of boundaries for footballers that you can't claim back on?
I think like maybe certain foods or supplements is a bit of a grey one. Right. Because it could be like, right, you need to be healthy anyway. Like a normal person needs to be healthy type thing. So it depends. Maybe that could be a bit grey.
They mix in, I think they mix in, like, that's a good point. They mix in like personal use and like very...
Yeah. But it's also, it's not just about like being a footballer. It's about being an employee. And there's a difference in terms of, you know, what you can claim as expenditure as an employee than what you can claim as like a sole trader or a limited company. Yeah. Whereas the rules for employees, it has to be wholly for the purpose of your employment, and expense has to be for the sole use of your employment, essentially. So where like football boots, it's no brainer.
Okay, a lot of players have a chef. So I
think HMRC would argue that. I mean, you need to.
Really? But I wouldn't have a chef if I wasn't a footballer.
Well, you don't know that. You don't know that. I mean, how do you know I don't have a chef?
No, I'm saying if I wasn't a footballer, I wouldn't have a chef.
Yeah, no, I know. But the point is that chef is cooking you, you know, food that you need to live off. It's not. You don't need it for your. It's not in your contract. You don't need to have a chef. It's your choice to have a chef.
That's like me buying recovery pumps and then saying, I don't need the recovery pumps. I'm still going to recover.
Yeah.
Still going to go to sleep.
Exactly. There'd be an argument. I'm not saying they would win the argument, right. But it's one of those things that, you know, if let's say I did your tax return, we had the conversation, weighed up, you know, the pros and cons about claiming certain things. Like, you know what, you know, I think we've got a good argument. Let's claim the recovery pump, and then, you know, year later, HMRC, like, dear Mr. Stewart, we've seen you've claimed, I don't know, £5,000 expenses. Can you confirm what it is? And we say recovery pump. They say, no, it's not allowable. Then what happens is that it's an argument. And what you have to do is you have to present a case to HMRC.
Yeah, this is what I meant when I was talking about having to defend it.
Yeah.
So you think that, like, obviously different from the better at defending it, right?
Yeah.
Then I was,
yeah.
Okay, cool.
Yeah.
And would it be you defending it as well?
What do you mean?
I mean, if I was...
Right, if it was you, my client. Yeah. And then what we do is that you build a case with, like, quoting case law, looking back at the records. And, you know, I quite like that. I don't like when clients have investigations, but I mean, we actually won a groundbreaking case against HMRC. We changed that law. It was in the Times. HMRC had produced a guidance on it. It was amazing. It was in regards to childcare holiday camps, and basically arguing that the sole purpose of that camp is childcare and welfare, and not activity based or sports activity. If it's sports activity, then there's a VAT position. If it's welfare childcare, there's no VAT. And our client had been paying VAT for many years. So we were doing this massive £500,000 reclaim for them. And it went all the way to tribunal, and the judge favoured us. And it was amazing.
So your client got back 500?
Yeah.
Bloody hell.
Yeah, and now there's other sports camps and holiday camps who now are reclaiming back their tax, because it's a fine balance. Because obviously, if you've got a sporting camp where you've got professional coaches training the kids, then you can't argue. But if you've just got an activity-based camp with no qualified coaches, and you're not going to turn them into Ronaldo and all this type of stuff, then you've got a legitimate say like, right, well, where are parents meant to send their kids? Like, what are the kids meant to do? And the best thing was the judge was like, right, so you just want the kids to sit there and do nothing all day or watch TV.
But then what's the difference though between it being coached doing football? So it's still a thing
because one's there is, but the underlying theme is that it's sports coaching.
So it's a bit more of a luxury.
Well, just that VAT law says that coaching and
Right.
sports activities is subject to VAT. That's just
Right,
what
okay,
the
got
sort
it.
of legislation says. Whereas welfare and childcare is exempt.
Yeah. So that's like I've just doing like tax returns and being within football. There's too many like things that I think they don't see as vital, which I see as vital, and it's just annoying.
Yeah.
Yeah, like even one that I even think as well. Like a lot of players in the summer go abroad, or a player that might be going international, they would go abroad. They would take their family, they'll go on holiday, but they would train somewhere as well, where it's hotter
Yeah.
than England.
Yeah.
And it's training. They go there. Okay, there obviously is a certain level of like personal use as well. You're not going to go there and not have any personal use for your training, but you do go there purposely to train in hot weather to adapt to gain fitness and adapt to going somewhere else. But they won't.
Yeah, no, look, I agree with you, and it's but it's an interpretation, and HMRC are very strong on it. It's like there's so many cases about it where you've got the TV presenters who are claiming their makeup and all this type of stuff. It's the same type of argument, and I do feel for people like that, because they're having to spend their own money to ensure that they're performing to the best of their abilities in their job. And so there is argument and precedent, but it's
balls me up. I'm not gonna lie.
Yeah.
We've gone off one there. To be fair, next one. What's the highest unexpected tax bill you've dealt with?
Oh, rough. I think we did 1.3 million. And it was basically it was back when there was huge investigations into offshore accounts, and there was this South African guy going back 20 years of non-disclosure.
Was he able to pay it?
He paid an installment agreement with HMRC.
Yeah, damn. And then one last one. Do you have a tax play of the wealthy? Something that the wealthy do, maybe that others don't know about?
Yeah, well, as we mentioned before, I think the family investment company is interesting. You don't have to be like mega millionaire to look into that. It sounds a fancy term, but essentially what it is, it's just a limited company with different shareholders. And there's some clever things that you can do around that.
Yeah. I think a tax play of the wealthy that I was don't do is probably just learn about tax, right?
Yeah.
No, nice. Thank you, man.
Pleasure.
Really
pleasure.
That was good. Thanks for coming.
Yeah, no, I appreciate it. Hopefully people got some good nuggets.
100%.
Yeah.
Well, tell me your handles, because your is very valuable, man. So
at Mitch the Taxman, I got my card for you. Which I bought.
Let's put it on set.
Yeah. So let's leave it there. There we go.
Nice. Private spot there as well.
Yeah. Thanks.
No,
Mitch Taxman.
Appreciate it.
Yeah.